welcome to Money Matters TV. I'm your host, Tami Fratis from Pax Capital Advisors. We have a really exciting show today. We're going to be talking about topics like cryptocurrencies and AI. Very popular topic. I have a great co-host, Neil Paschall, who's joining me. Hi, Neil.
Hi, Tami. Great to be here.
Great to
Thanks
have
for
you,
having me.
Neil. Great to have you. I'm so thrilled to have you because I know that you're an investment banker that is building a practice in the cryptocurrency space. So for all of us who don't understand that market, tell us about cryptocurrency and Bitcoin and why we should care.
Well, cryptocurrencies and Bitcoin are really the latest technology that is eventually going to completely drive the financial services industry. And it's a really important time right now because we're on the verge of achieving what I would call regulatory clarity here in the United States. The Senate Banking Committee is going to drop the so-called Clarity Bill for debate at their session tomorrow morning at 10:30, and assuming that that bill clears the Senate Banking Committee, will go on to be basically incorporated in together with the bill that's already passed the Senate Agricultural Committee and then to the floor of the Senate. If it passes in the Senate, then it has to be reconciled with the House bill and then on for a presidential signature. That will provide a regulatory clarity and will bring literally trillions of dollars of institutional capital that have formerly been just sitting on the crypto sidelines. It'll enable that capital to enter the market. So it's an exciting time to be involved in crypto and blockchain, and really happy to be here to chat about it. I know you're also involved.
Yeah, sorry, Neil, to cut you off, but a couple questions before you ask me some questions. So you're building a practice, an investment banking practice in this space, and the regulation will allow institutional funds in the trillions of dollars to flow into this space. But for people like me, professionals who might want to get involved in the space by investing, when do you think the market, the inflection point for retail investors will actually come about? Is it under this presidential term or is it under the next presidential term?
Well, President Trump is attempting to make the United States the crypto capital of the world, and I think that's an important thing to consider. If we get this regulatory clarity, I think that will be a catalyst for both retail and institutional. I've already spoken a little bit about institutional money coming into this space, but when that happens and prices start going up, the retail will follow very quickly.
Okay. So I go to my money manager, and at some point when I look at my portfolio, crypto will be a slice just like alternatives.
All of the big banks are adopting this technology. Goldman Sachs recently initiated an ETF, an income-based ETF based on blockchain. There are about 10 or 11 other ETFs that are built on Bitcoin, as the investable asset. So lots of opportunities to invest. All the exchanges are coming into crypto as well.
That sounds great. Well, I guess just to segue, I'd like to give a little update about what's going on in the macroeconomic world that we live in. and everyone knows there's been tariffs for some time. It looks like tariffs are finally creeping through and increasing costs on almost everything, even down to the Starbucks coffee cup that you might get when you go to Starbucks or another coffee maker. Inflation is up 3.8% year over year. And instead of the Fed cutting interest rates, it looks like there's a 3% chance that the Fed might increase interest rates. So what does that mean for the M&A market, which is the market that Neil and I live in? It means that there's still more than $2 trillion sitting on the sidelines waiting to invest in quality companies. Quality companies meaning private companies in our world. Of course, they invest also in public companies, but we're just talking about private companies in our world. And those quality companies that are thinking about going to market should have gone to market maybe 2024 when the market valuations were really high before the tariffs hit and there were supply chain issues. Those valuations are still frothy, and the multiples are up over 7%, generally speaking, depending on your industry. Some are a little bit lower, some are higher. But we advise our clients to get audited financials and quality of earnings report. There was a study that just came out that a quality of earnings report alone will get a valuation multiple higher of 0.4%. So if you were at a $70 million valuation, you're going to get $74 million. Certainly worth the $50,000 to $100,000 you would pay on a quality of earnings report. Neil, what about you? What are you seeing?
Well, I'm not convinced that that tariffs actually cause inflation. You know, with a tariff, what do? You get a one-time price increase. That's not inflation, and inflation is not caused by price increases. Inflation is caused by the debasement of the currency. It's quite odd that the chairman of the Federal Reserve stated that he thought tariffs were going to cause inflation. He's the one who causes inflation by debasing the currency. But I think I think we're still going to see higher inflation in this period we're living, and the reason is quite simple. We've got $39 trillion worth of national debt, and you're not gonna raise taxes enough to pay off that debt. You're not going to cut spending enough to pay off that debt. The only way that debt is going to be impacted in the future is by paying that debt off with dollars that are worth less than the dollars in terms of purchasing power that you received when you took the debt out.
So, Neil, is there any opportunity for the cryptocurrency market to help us?
That's a very good question, and I think it's not just crypto by itself; it's other technologies. We've got the internet, we've got blockchain and crypto, and we've got artificial intelligence as the three big driving technologies. And if you add to that robotics, we're going to see a very significant increase in productivity over the next few years, and I think that's going to have the biggest impact on reducing inflation.
But what about the debasement of the dollar? How do we shore up that base? I guess that's what I'm trying to understand, what we could do as investors, as citizens, as financial people. What could we do? Is there anything we can do?
Well, the key is to put your wealth into hard assets. That's the only way to protect yourself against the debasement of the currency. And by hard assets, I mean things like real estate, equities, Bitcoin, precious metals, things that basically hold their value. Yes.
Yep. Well, that's so interesting. We have a client that has a business that is in the raw land space, and they're able to buy land throughout the country and just hold it for, a year and a half, and sell it at a 3x return. But your suggestion that we all should have some real assets, land, maybe buildings, gold, silver, crypto. What else did you mention? Equities.
Equities, yeah, precious metals, equities, real estate, Bitcoin. Bitcoin has been, over the last decade, has been the best performing asset by far compared to any other asset on the planet.
Well, we have to take a question from the audience now. Mary Waldron of Philadelphia writes in, what are some of the advantages of AI in your business? And our business is, of course, investment banking. Neil, I'm not sure if you use AI in your individual business model for crypto. I know our firm uses AI, but why don't you tell us a little bit about how we use AI in our business?
Well, I'm not an expert in this area, but I am a user. And what I've found with having AI available is that I'm able to produce things that are beyond my own individual capability to produce alone, but also on the that are better, that can be produced by the AI itself. So, a human working with artificial intelligence can produce work that is better than either the human or the artificial intelligence can produce by itself. That's been my experience.
Yes, and I was reading a statistic that it makes us 30% more productive. And I would absolutely say that's the case. I know at the firm level, we use artificial intelligence to help with a first draft of things like our pitch books or our confidential investment memorandum. And it allows us to take more time for the human oversight and input into fine tuning our pitch books. But we can produce so much more, and we can also use it for data mining. So, of course, when we're taking businesses to market, we want to know what the competitive companies have received from evaluation. We want to know what transactions are going on currently. And we also want to look at results in the public market. And so with an AI, we can do that so much more quickly than we could if we had 5 analysts all going out public, private, nationally, internationally. So it really makes our business very effective. So if you have a question, please write in, and we'll tell you how to write in. Send your questions.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our hosts and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Okay, so send your questions in. So, Neil, we're going to now introduce our guest. We have Armando Pantoja, a financial futurist. Goodness knows we all need to know what the future holds financially, from Pax Capital and founder CEO. And he will be talking to us about both AI, crypto, and blockchain. So very timely guest for the show. Welcome, Armando.
How's it going? How you guys doing today?
Good.
We're doing great. How'd you ever get into your business as a financial futurist?
So I started out, went to college for computer science, studied, so I got out of school and I was a software engineer for many years. So I went back to grad school to study more computer science. So the first day they asked me what I want to study, and they said, I said, I want to study software security. They said, well, you have to pick a specialization. And I said, cryptography. Right. So cryptography put me very early into crypto. Now, cryptography is the study of computer encryption. That's what crypto is based on. So I just got around it early. So I got into crypto around 2011. A few years later, I got into a company called ICE Stock Pickers. We built stock trading algorithms back in 2012, 13. And over time, I got more involved in the crypto world, more involved in the stock world. I had a major acquisition of a company we created in 2018. And it just grew from there, right? Is that I've always been interested in economics, and I've always been interested in the future. So those two things have come together, especially with the emergence of cryptocurrency, digital assets, DeFi, even NFTs a few years ago. All of these things are starting to converge to make technology and finance one and the same.
Awesome. And where's your business physically located?
Tampa, Florida.
Tampa. Okay. So you're a fellow Floridian.
Yes.
Wonderful. And how many people do you actually have at the business now?
There's 6 people now. We have 6 people.
Great. Neil, you want to ask Armando some questions about
Sure.
your expertise?
Yeah, Armando, great to meet you. Great to have you here today. You went from building trading platforms at TD Ameritrade and leading tech at AAA, and then founding and selling the ICO Ranker for millions in 2017. What was the biggest aha moment that made you bet everything on crypto and blockchain back in 2016?
Okay, so I got into crypto 2011. Remember, I was a software developer at the time, but I was in grad school. So I heard students talking about it back then, and at first, when I first got my first Bitcoin in 2011, I paid like $150 or something for it. I bought 2, and I really thought the potential was in integration. So I started a company, and what we did is we integrated payment, an alternative payment method on your website or at your business, even with ATMs and stuff, on how to pay Bitcoin as an alternative payment method. And I did that for 3 years, and I did not see the invest. For some reason, it did not click that it was an investment. For 3 more years, from 2011 to roughly 2015, I didn't even see it as an investment. I saw it as a smart technology that was going to do big things. I did not see where it was going. At that time, I just knew it was a smart way to pay for things. 2015, Ethereum came out. When Ethereum came out, now that was the first crypto that allowed you to build, build a DeFi or build, tokens on top of that blockchain. And then I watched it go from 30 cents to $6 in a matter of weeks, and it just clicked that I can invest in this thing. And that's when I really started actively investing. But I was first involved on the integration technology side.
And what does DeFi mean, Armando?
Decentralized finance. So it's any type of yields or any type of financial product that's built on the blockchain or using cryptocurrency.
And how does that play into AI?
So AI is and I like what you said before we spoke. A lot of people don't realize 1956 was the first time it was AI, the inception of AI. And it was actually, a concept before that in fiction works, but that was really the emergence of AI as a discipline in computer science. And we've had big breakthroughs in AI over the years with facial recognition. We've used AI in the 80s to do credit checks and credit worthiness checks. We had AI, AI has been around for a while, but we had a big breakthrough with ChatGPT. But what the future of AI is that we're going to have virtual and physical AI agents in our world, right? And I believe that those agents one day will need a way to transact, and that's what's going to allow them to transact. Now AI is too fast, and it requires too much information to exist on our current network, current financial system. So AI in the future will choose blockchain and cryptocurrency to transact between each other and also with humans. And I think that's where the convergence of AI and crypto is going.
Wow.
That's interesting, Armando, that if agents are going to be moving money around, it's all going to be crypto, isn't it? No other way to do it.
And what people don't realize with that point is that a lot of times we make projections on the future of the financial system based on where things are today, or where there's this many people, there's that, but what we don't realize is that the amount of what we consider people, if you include virtual and physical robots, could triple or quadruple in the next 25 years. Now we may have a robot out there that needs a place to get energy. It needs to, it needs to some kind of pay for its work or pay for data that it needs to process, or maybe, other things between robots or whatever. So now they also need a financial system. They need income coming in. They may need a lot of things that actually expands the financial system and makes market caps in stocks, market caps in cryptos, and just addressable markets end up a lot bigger than they are today.
So almost every day I get either an email or a phone call with someone trying to hack into my system or scam me.
I know.
How can cryptocurrency or blockchain protect an AI who is transferring money? How do we just control it so that it's not a massive fraud and massive theft?
I'm glad you. That's a good question. I'm glad you brought it up. There's actually a big threat hanging over cryptocurrency right now. Is that a lot of people who are in crypto don't know how to use it really. They're trying to invest or whatever, but it leaves a big payload or opportunity for hackers, scammers to try to go after that crypto. And that's something that I see could be a huge problem if it's not fixed. And I think the way we fix it is we let, and I hate to say this because I was a person who early on did not want the banks involved in crypto. But as I've matured and gotten older, I realized there's a need for it. No, if banks have custody of crypto, we don't have, the regular person we have other things like that. Even with stocks, nobody can steal my stocks because it's stored electronically with the broker. So nobody can steal it, right? So I think crypto has to be like that before everybody can, use it safely. It has to be stored somewhere, and I can use it, but I can't access the private or really even maybe the public key, but I can't access the private key, or I can't. It has to be and I hate to say this, but it has to be somebody, an intermediary, to stop so many, so much crime that's going on around blockchain and crypto right now.
So the idea being, if I'm a gazillionaire and I have private keys that could unlock the crypto, someone can't hold me hostage at gunpoint and make me give them the key, because someone else is going to have that key. Let's say it's UBS, and UBS is going to have their own protocol to know that if I call and try to make some very suspicious transaction, that they're not going to release that pin because they're going to have some other way of locking down the crypto. Is that what you're thinking?
It has to be something like that with crypto. But the power of crypto is that I think it should still be freedom. For example, I want to do self-custody. It has to be a path to that, But I think most people will probably be better off if those type of mechanisms are in place.
Neil, what do you think?
Well, one of the difficulties with cryptocurrencies in general is that you're trying to achieve three things simultaneously. You're trying to achieve decentralization, you're trying to achieve absolute security, and you're trying to achieve scalability. These three things are very difficult to achieve simultaneously because they, in a certain sense, they have a tendency to offset each other. But Bitcoin was able to achieve decentralization, security, but it's not really scalable. And some of the other altcoins like Ethereum, have achieved a certain amount of decentralization and security, but not scalability. The only one that is really on the verge of achieving these three things simultaneously is Cardano, and they still have some work to do on scalability. But security is certainly an issue. But if we get to the point where we can achieve this, the blockchain trilogy, these three things simultaneously, we'll have protection against some of the risk that Armando was discussing.
So Armando, when you talk about AI and the growth in AI, which roles do you think are most at risk as far as jobs, job security, or even majors in university? What do you think is going to go away? Creative writing, because the AI is more creative than we could ever be?
I think that copywriting is going to go away. I think creative writing will still exist. I think that anything that's art, creative writing, artwork, sculpture, things like that. The issue that I think a lot of people are missing is that they see AI create these works of arts. They see AI do creative writing, but I think the human need for us to want to connect with another human is going to supersede that. For example, if I see a beautiful, like if I go to your house right now and I see a Monet on your wall, and I said, wow, it's a beautiful Monet, and I'm looking at it and I appreciate it. It's, that's a copy. Immediately it loses value in my mind. It's the same image, but why, that's what's going to happen with AI is that we want things that come from humans that are original, that are unique. And I think that that's going to supersede AI in that industry. But there's normally three things I talk about that causes a job to be replaced. One is that you repeat processes, and your job is basically just repeating processes throughout the day. Second is that is when you have easy decisions, and what I mean by that is that you don't, there is no real decision making in your job except for small, low level tasks and things like that. And third is that you don't have accountability or ownership. Nobody asks you. You don't get pulled into meetings. Nobody asks you about strategy. Nobody asks you about your thoughts or your insights. Those things will cause a job to get replaced fast. And this, a lot of the, clerks, analysts, things like that, customer support. Those are all jobs that fall in that bucket.
I read an interesting article that Amazon or AWS was going to double in size. But the workforce was going to stay from a number standpoint the same because they were going to replace a lot of the repeatable jobs that you mentioned, like the warehouse stockers or pickers, with robots. But then the whole new category of jobs was going to be created because someone has to oversee the robots and also someone has to take care of exceptions. So if a robot drops something and it breaks, the robot doesn't know that he needs to go get a new one. And so someone has to be overseeing, oh, this is an exception. We need to report that we lost a piece of inventory. We have to go get a new piece of inventory. So I thought it was interesting that there's going to be new jobs created to manage the robots.
Yeah, I mean, that's what I talk about the director position. Those are going to expand. But I mean, for every 10 jobs, 20 jobs lost is going to be one director job, which means overall job loss will still be negative. But the director position, like you just mentioned, will exist. And what I mean by that is that somebody has to watch the robots. AI right now is like 98% correct. They still, even if you use ChatGPT, it's 2% that's wrong. But at 2% is detrimental. If it's right. Somebody has to check these things, at least for the foreseeable future. And I think that we're pretty far off.
We are going to have to end our show.
Okay.
Our next guest is going to be Kemen Hatsu, and they're going to talk about internet law. Okay. And their law firm is Growth Counsel, LLC. We really appreciate having you on the show.
Oh, thank you so much. I appreciate it.
And love learning more about crypto and Bitcoin. And Neil, so great to see you as a fellow ACT Capital Advisors Managing Director, building an investment banking practice as we're all doing at ACT. Thank you for your watching our show today. And thank you for a great show. I'm Tami Fratis from ACT Capital Advisors, and Money Matters TV cares about you and your money.